Hello, investors. Welcome. Joseph Areu again. Welcome to Mali Investment Talks, where we try to make sure that we become financially independent. Please remember, as always, to subscribe to this channel so that you keep getting updated as and when I put in new videos. And do remember to get in contact with me. And many of you have done that and done that very well. Give me a call, send me an email, send me a WhatsApp if you want to clarify something. I'll be very, very happy to do that. Today, we are going to continue to answer some more questions that came from you, dear viewers. In particular, there was a question from Grace Sarah. Grace, thank you very much for your question. The question is, what is the difference between unit trusts and money markets? Okay, what is the difference between unit trusts and money markets? Well, one obvious thing you can see, unit trust, money market. So money market, that's a market. Unit trust is a vehicle, an investment vehicle, a vehicle through which you invest in money markets for that matter. So a unit trust simply invests in market investment products which are in money markets. But unit trusts broadly invest in other products, other investment products, which may not necessarily be part of the money market. So what are money markets? So money market are essentially a market for short-term securities which would be used mostly to manage short-term liquidity needs. So what do I mean by that? These are usually investment products for periods of 1 year or less. So you have some money, you want to put it away, but you will need it in 1 year or less. You're not going to buy some long-term instrument like a share or something. Instead, you will buy a product which, number one, assures you of safety. Your money will be there in that 1 year or less period of time. But number two, assures you liquidity. Yes, the money might be there, but are you able to get it when you need it? All right? These products would assure you liquidity. Okay? What are examples of money market products? Treasury bills. These are government treasury bills. We talked about them before. Corporate paper. So again, these are short-term. This is short-term debt to companies, to corporations. In the interbank market, for instance, you have banks borrowing money from each other for short periods of time, like it could be 7 days, maybe 2 weeks, it could be less than 7 days, the interbank market. It could be repos. This is essentially central banks borrowing from banks mostly, okay, at a certain rate, all right? Repos is short for repurchase contracts. We can talk about that another time, but basically these are elements of what we would call money markets. We also have reverse repos. So instead of banks borrowing, banks can lend to financial institutions, to banks, to shore up their liquidity. You might recall during the COVID days, there were issues of liquidity in banks, and some central banks came in to try to address that through reverse repos. So all these, as you notice, are financial instruments or investment products which are aimed to address matters of short-term liquidity. All right? Now, unit trusts, when a unit trust invests in those kinds of products or financial instruments and invests exclusively in those kinds of financial instruments, that is then called a money market unit trust. What does that mean? It means money market unit trusts are not the only unit trusts out there. So when you go to buy a unit trust, ask your financial advisor or whoever is selling the unit trust, what are the other available types of unit trusts? Unit trusts tend to be categorized in terms of the products or the financial instruments in which they invest. So like I've just said, if they invest your money in money market instruments like the ones I've just listed, then they are called money market unit trusts. Right? If you look at the financial press, if you go to Nairobi, you will see the Business Daily. Every day you will see a list of money market unit trusts and the returns that they are giving now. So what that means is that those returns are coming from investment in some of those financial instruments I listed: treasury bills, corporate paper, and so on and so forth. What are some of the other types of unit trusts that you could get? Some unit trusts could invest your money in also money market, but longer, slightly longer, longer maturities. So typical money markets would be a maturity, like I said, of 1 year or less. In fact, sometimes the regulators restrict them to 6 months or less. However, some unit trusts can be structured to invest your money in longer securities, including bonds, for example. 2-year bond, 3-year bond, 5-year bond, and so on and so forth. All right? Depending on the country in which you live, some of those unit trusts could come under different names. So in Uganda, for instance, you will hear of umbrella fund, or umbrella unit trusts, right? Those, depending on which provider you are dealing with, that is an example in Uganda of a unit trust which invests in safe, fixed income financial instruments, but they tend to be of a longer maturity. All right? You could also have unit trusts called, again, depending on the country in which you are. In Kenya, you would find unit trusts called growth unit trusts, for example. In Uganda, you will find unit trusts called balanced unit trusts, or a balanced kind of product unit trust. What these ones do is to invest your money in a balance or a mix of fixed income, maybe long-term fixed income, short-term fixed income, 1 month, rather 1 year or less, long-term, 2, 3, 4, 5 years. A little bit of the money might also go into equities. That means in shares and things like that. So it will be up to the fund manager to allocate your investment in such a way that they minimize risk but try to optimize the growth in the long term. So, like I said, depending on the country, some will call those balanced unit trusts, others will call them growth, and so on and so forth. But the idea is that they will spread your money in different financial products with a mix of maturities, long-term, short-term, and a mix of risk profiles, high risk like shares, low risk like fixed income. You could also find in some cases what you call bond unit trusts. So these are essentially unit trusts investing in bonds. They invest your money in nothing else but bonds. Short-term, short, medium-term, long-term bonds. All right? So, yeah, it's fixed income, very low risk, but now, yeah, there will be some small risk along the lines of what I explained earlier about the risk of investing in bonds, inflation, and things like that. But that product is out there, bond unit trusts. There is also, you could also find equity unit trusts. So again, as the name suggests, these unit trusts would invest all your money in equities, in shares, essentially. That is what that means. So when you invest in that kind of unit trust, in the long term, you're expecting an enhanced rate of return, but you then expect that the risk is going to be significant, the volatility in returns. Bad year, equities can perform very badly. In a good year, they can perform very well. So that is something then you should expect. In that case, obviously, I expect you to discuss comprehensively with your financial advisor about the advisability of investing in some of these products. So this is a broad range of unit trust products. There could be others out there, but all I'm saying is that when we say unit trust, sometimes people think that, oh, it's all about money markets. Money market is just one type of unit trusts, which I've tried to explain. But there are other categories of unit trusts which vary or differ in terms of the risk you're exposing yourself to, the liquidity that you can expect. If most of your money is going into long-term assets, maybe it could affect your liquidity, and obviously the return that you expect over time. But discuss all that with your financial advisor to get details, or basically the provider of the unit trust should be able to explain to you the available suite or range of unit trust products. Thank you very much. I hope that clearly lays out the difference between money markets and unit trust for Grace, and whoever else would want to know the response to that question. Thank you very much. Do let me know again. Do call me if you want further clarifications, and by all means, do subscribe to this channel so that you get further updates. Thank you.